Greetings everyone, April 22nd, 2010. Joseph James, schooloftrade.com. Here's your live trading recap. Hope you guys had a good day like we did here in the room. If today was your first time in the room today, guys, I want to welcome you guys aboard as part of our trial, or maybe as a new advanced member. Big warm welcome to all of our brand new members that joined over the night last night. I want to bring your attention, first of all, guys, to a brand new link on the blog right now. And if you haven't gone to the blog recently, the blog has seen some fantastic improvements. We have everything from brand new articles, of course, 2-3 videos a day right now are being added to that blog. If you haven't gone to the blog yet, right below the video, there's a link, and then we'll take you right to the blog. Now, while you're there, look at the search box now. We just added a brand new search box. It's going to make it easier for you guys to find all the things you're looking for. So let's say you want to learn more about tape reading. Type in tape reading in that search box, and that's going to bring you up all the videos, the articles, all the commentary we've done on tape reading. Guys, it's a fantastic free place to learn, and while you're there, make sure you guys subscribe to our RSS feed. That way you get all the new stuff that comes out. Whenever it comes out, it gets put in your email box. All of our social media, Facebook friends, right, Twittering updates there. And don't forget, you can sign up for the newsletter at the bottom as well. But there are so many great things, guys, even a free market profile indicator there on the blog. So use the blog. Got lots of free resources. And as always, don't forget, we love your feedback on the blog too. So don't be afraid to ask questions on the blog. If you want to see things covered, ask a question on the blog. Plenty of ways to get your questions answered, guys. Post them on the blog, email us, and we might be covering your question in our next video. So if you want to find something new, if you want to learn something new and it's not covered on the blog, if you can't find it there in the search box, email us, put a question on the blog, and we'll make sure we answer that for you guys in our next video. All right, let's talk about the trades we took today here. We took 2 trades today, guys. Of course, we had a losing day yesterday. We had to overcome that obstacle of getting over that fear and the emotions of having a losing day yesterday. But we had no problems with that this morning. 2 trades, both on gold. Like I said, we had to overcome that losing day yesterday, and today's price action made it a little bit easier for us. We took 28 ticks out of the market. We're looking at just shy of $6,000 for the month so far, and we're over 30,500 USD for the year of 2010. Having a great year, having a great week, and a great month. We'll keep you guys posted the rest of the month. What was the most important thing that happened today? Well, of course, we're coming off a losing day yesterday, so we had to make sure we had really gotten over that emotional roadblock, right? Now, we moved to simulation yesterday and got a lot of our confidence back. If you watched the video yesterday, or if you're with us yesterday, we did a good job of digging ourselves into a nice hole, giving back some money to the market, right? Nice charity work we did yesterday. And then, of course, we moved to a simulator to stop the bleeding, but we finished the day yesterday on a very high note because we finished with 4 winning trades back to back to back to back. So we had built up our confidence back, but now we had to prove it to ourselves. Come in this morning, right? Put our money where our mouth is, and we needed to execute with confidence. Now, when we opened up our chart this morning, we did our tech prep for the day. We realized Mr. Obama, right, President Obama, was announcing something on financial regulation at noontime today. Combine that with 8:30 news, 10:30 news, 11 o'clock news. We had a lot of stuff going on. So, of course, we really had to work with the alarm clock today, making sure that we had all of our time well budgeted because we had lots of news events throughout the morning today. As always, we wanted to make sure we watched the dollar first and then look at the first couple moves of the day to see kind of what the taste is going to be like in the day to come. So watch the dollar first, and then we'll look at some learning examples we saw for the first couple moves today here. Okay, actually lots of opportunity today to learn from the market. Here was a great example of it. Now, normally we look at the dollar, but today I wanted to bring in the ATR here for you guys and show you guys a great learning example here on the dollar with the ATR. Now, on the left side, you've got your dollar index slow time frame. On the right side, you've got your ATR of the dollar. Now, I want you guys to notice here. Yesterday, we had this double top and double bottom. Well, this morning we woke up here 8 o'clock, 7:45, and we saw the dollar had broken out. So dollar had broken above the highs from yesterday. Now, we always like to look at, once we see a breakout like that, look at the ATR. Because the ATR is going to confirm if that breakout was really validated. What I mean by that is if we break out to the upside, how many times have we seen a fake out breakout? How many times have we seen price break above a high, go 1 or 2 ticks, and then get sucked right back down in? Right? Hopefully you weren't long, but of course that's how it usually goes. So we expect, of course, if we see the ATR dropping when price is breaking out, we expect it to, of course, tumble now and come right back down in the bracket. Okay, so you look at the ATR over here, and we see the ATR is falling, right? ATR is falling here. Now again, we really don't care what the actual number is for the ATR. We just care what it looks like now compared to where it was 10 or 15 minutes ago. Okay, so it's not so much a literal tool, it's going to be used as a comparison tool. So I see the ATR dropping while the price breaks out. What do you think that tells me? Right, price is breaking out and the range is becoming narrower. That should tell us that the concern in the market is growing as price is rising. Now when we see ATR drop, price rises, again, we expect the price to roll over, drop back down the bracket, and then go sideways again. But we saw something interesting here, and I want you guys to notice this. What we saw was the ATR remained relatively flat on the dollar all morning, right? We never really saw it jump to the upside or the downside on the average to range. But this is a very interesting situation, and I wanted to point this out to you guys because I thought it was definitely worth your while. Now in this case, we saw the dollar not drop back into the bracket, but it stayed kind of hung up here, almost just sitting here, kind of suspended in air. And it went sideways again. Now guys, real quick, how do we use the dollar index? We don't use it to trade with. We use it to identify sentiment, potentially avoiding some bad trades. The easiest way to use the dollar is that when the dollar is moving, we expect other markets to move. When the dollar is flat, like it is right here, we expect everything else to be relatively flat. So what happened was, because the ATR was dropping, we expected the market to go flat inside the bracket. But it didn't do that. It went flat above the bracket. Now, I want you guys to see this because it doesn't matter what price level the dollar is trading at. The dollar here is going sideways at 81.80. The dollar could be going sideways at 81.30. Okay, inside the bracket, outside the bracket, it really doesn't make that much of a difference for us because if it's going sideways, we know to be careful. So a good example here, use the ATR. Okay, if the price is rising and the ATR is falling, it's just like if the speed is falling. Okay, it negates the move. It tells us this move is diverging from the fundamentals, which means it's probably going to reverse and come back down. In this case, though, we saw a great example in the dollar of how we saw it go sideways, and it doesn't really matter where it goes sideways. Okay, it's a good example. Next up, and again, we had a lot of great learning opportunities today. This was the first move of the day. And I wanted to show you guys how we use speed here. Now we use speed. Speed is the pace of a tape indicator, right? Speed is down here in the lower left-hand corner, right? This is the pace of the tape indicator. Now you'll notice we have less than 100 here on the pace of tape. In fact, we've got 40 right here on the pace of tape. And this is the first move of the day here on gold. Right above here, you see my slower time frame. This is the wave setup for a short trade. Now the pattern set up perfectly. It got into the zone here, but the first move of the day here at 9 o'clock, what do we see? Very slow speed, very slow speed. So we got momentum pointing down. We have the trade almost picture perfect setting up there. But the problem was we didn't have speed. Now what do we look for a wave short? I want to see decreasing speed while we're retracing up, and then increasing speed while we're pulling down, right? While we're drawing down. Now in this case, you can see the speed was very slow until the last minute. But notice the price had already moved. So this is one of those examples, the first move of the day, where it really told us we need a little bit more than what the market's going to give us this morning. We saw very slow speed of the tape. Everything else lined up. And before we could see that speed increasing, the move had already happened. What that tells us is low volume, low speed. This price action could go any which way. Okay, so the first move, this is a good example of how sometimes we want to sit back, sit on our hands, and let that first move pass us by. This obviously was a big winner here. We didn't take it though because again, first move of the day, slow, slow, slow speed. And as you guys can see, I wanted to show you guys where we look for that stuff on the pace of a tape.